Okay, so a very warm welcome to all of you. Welcome to this afternoon's panel session on Too Few Deals, Too Little Money. Now, at IIX, we constantly hear this thing. We speak to social enterprises and they say there are not enough serious investors. We speak to the investors and say there are not enough quality deals. So what's going on? Why is there a disconnect? The purpose of this afternoon session is really to sort of we'll start off with a broad overview of what's happening on the supply side of capital and go to the demand side. And I'll turn it to my very esteemed panel here, which are all very experienced practitioners on the ground, to get some feedback about what they do in their organizations. And secondly, sort of elicit some of these and flush out some of these issues that are preventing investors from connecting with social enterprises to making successful impact investments. So, it gives me great pleasure to introduce my panel of very distinguished speakers that we have with us today. To my right, we have Geoff Woolley. He's the CEO of Unitus Impact, which is a very established, one of the pioneers impact investment funds operating in India. They really focus, they have quite a large group that Geoff will tell you later, but Unitus Impact focuses on investing in innovative businesses that provide livelihood alleviation. Now, to Geoff's right, we have Michael MacHarg. Michael's actually one of the co-founders of a very innovative social enterprise known as Simpa Networks. They provide clean rural access to people in India that live in off-grid locations, and they use a very interesting pay-as-you-go model. To Michael's right, we have Timothy Ma. Timothy is, if you go to Hong Kong quite often and you go into the circuit, he's a very experienced social entrepreneur. He helms what is known as the Senior Citizens Health and Safety Association in Hong Kong, which is regarded as one of the most successful social enterprises in Hong Kong. And last but not least, we have Anurag Agrawal. Anurag is one of the co-founders and COO of Intellecap. Intellecap is one of the very established players in India that provides a whole range of services, and they describe themselves as a social investment advisory firm. So before I turn it to the panel and give them a couple of minutes to talk a bit about themselves and the organization, I thought it would be interesting as a moderator to sort of frame today's discussion and sort of show you where we're trying to get at. Because I know concept of social impact investing is relatively new in Asia, and we just thought we'd share a few slides with you to just give you some background. Okay? I need a pointer. There we go. Okay, there we go. Can you guys see? I'm going to stand, okay? So let's firstly address the first question, too little money. Okay, what this slide basically shows, according to BCG, if you look on the left-hand side, that's the investment universe. Okay, the figures vary according to when you ask the question. If you ask it in 2008, pretty low. Post-Lehman's, getting better. And then now, somewhere in between, you see research reports about managed assets floating anywhere between 80 to 120 trillion. But we went with a conservative figure of 53 trillion. So there's $53 trillion circulating in the global capital markets today. Now, of which 20 trillion of that is broadly into environmental and social focus. 7 trillion of that is into SRI, or socially responsible investing. Now, based on JP Morgan's report, which you have heard quite often cited at conferences like this, they've come out with a figure of 1 trillion. They expect the market capitalization for impact investments to be estimated up to 1 trillion in less than 10 years. So that's the bubble in white. Now, on the right-hand side is the philanthropic bucket. And what you see is you've got an annual giving of about 310 billion just in the US alone. And a dot of that is into venture philanthropy, which is broadly in the range of 50 billion. So to answer the question, is there too little money? Well, I think most of us believe that's clearly not the case. Okay, now let's look at the other side. Now let's look at the demand side of capital. Okay, we've been talking a lot on social enterprises, and really they form the huge ambit of various sectors that includes anywhere from health, food security, fair trade, environment, infrastructure, water, housing, etc. Now, just based on Shujog's findings, Shujog is our our sister associate, which is not-for-profit. It does a lot of mapping exercises where they do research on the ground. Just based on our mapping, these are some of the figures of the number of social enterprises in these Asian countries that we consider to be investment ready. For those of you who can read it, you can see India has over 1,000, 1,150, Thailand 228, Indonesia 64, Philippines 530. Even in a place like Singapore, we have today 150 registered social enterprises here. Okay, so again, to the question of two-field deals, are there really two-field deals? Now, let's have a figure. If all these enterprises are trying to address the world's biggest social and environmental problems, have a guess whether this figure on these rates are going to escalate at an exponential rate or stay the same. Arguably, it will grow at an exponential rate. Okay, so we don't believe they're two-field deals. Now, what seems to be the problem? Okay, where is the disconnect? Now, we hear many things from both sides. So these are just some ideas to give you guys, a semblance of what are some of the issues that are bugging investors and some of the issues bugging social entrepreneurs. Now, on the right-hand, my right-hand side, you see the social entrepreneurs, the people raising capital. A lot of them are saying we're speaking to investors, but they don't really have the same mission as us. We're speaking to investors, and their horizon for investment is too short. They're not patient enough. Even if we have a great business plan, a great team, there's no infrastructure to help us. You constantly hear this gripe about lack of capacity builders, right? Even if we had a great business plan, capacity building, etc., we have no funding to attract talent and expertise to help us. And lastly, even if we knew a couple of investors, we find that a lot of our meetings or elevators pitches have gone horribly wrong. We need help. Okay, so investor engagement. Now, on the other side of the fence, you speak to investors. And a lot of them are saying, okay, fine, we know that there are deals on the ground, but we don't get a lot of good information. It's hard for us to find the deals, hard for us to due diligence them. Okay, there's no transparency. Even if we find the deals, we often have a mismatch with what we think in terms of return and risk. Okay? And because we're in the social space, a lot of things that you heard this morning as well about performance metrics. Now, it's not for everyone. Some investors that you hear from some of the feedback on this panel as well, some will say they're pro for metrics, some will say they're not really. Okay, but the point is it exists. If you're in the social investment space, there needs to be a way that you measure that social outcome. Whether it's by metrics or it's by simple methodology, there needs to be a way, and that's one of the disconnects. Again, ecosystem support. You hear in the course of the next few days some of the deals that we've been working on, and some of the deals, literally, I sometimes feel that I wish I was back in my investment banking days when a whole team of resources to help me do these deals. Okay, there is an ecosystem gap in the market. And lastly, a lot of them ask, even if we like the deal, we can invest, we're ready to invest, but what about exit and what about liquidity? Okay, so these are by no means an exhaustive list, but this is just an idea of some of the disconnects. Now, what are we trying to do at IIX? Essentially, our mission is trying to pair investors with social enterprises. We're trying to bridge some of that disconnects and help them in the capital raise. How do we do that? Well, we have 3 platforms that we think will help this process. Earlier this year, we launched Impact Incubator. Essentially, it's a partnership with the Silicon Valley consortium of investors that provides seed stage funding for social enterprises that use technology to address social and environmental issues. Okay, so that's Impact Incubator. Now, Impact Partners is what I'm in charge of, and Impact Partners is really the private investment platform of IIX that we launched last year. Essentially, it's a web-based platform that connects growth stage social enterprises with a whole range of investors that includes high net worth individuals, institutions, and funds. Now, our most aggressive platform is known as Impact Capital. And this is really what has been branded by some as Asia's first social stock exchange. Essentially, a public trading platform where issuers, in this case social entrepreneurs, can raise capital by issuing securities. But the difference, what makes it social, is in addition to financial listing criteria, there'll be a combination of social and environmental. Okay, we know that we can't do this alone, and as a result, we need to build the ecosystem. Okay, that includes everyone on my panel today, as well as all of you here. Okay, if you look around the bubbles, we need banks to come in, accountancy firms, consultants, we need people to help assess social metrics and return, and obviously we need impact investors and social entrepreneurs. So this is really just as a cursory introduction to frame today's discussion. And I'd quite like to now turn to my panel and let I'll probably give a couple of minutes and to let each of them tell you about themselves and their organizations, and maybe share some thoughts about how they're going to contribute to today's discussion. I will leave 15, 20 minutes at the end for the floor to have questions, so start thinking about what you're going to ask. We want to make this session as interactive as possible, and Michael and Geoff have really told me that we're going to make it controversial, so feel free to challenge them, not me. So I'd quite like to turn it to Geoff.
Maybe I'll stand here. I'll just give a brief presentation on Unitus Impact. But just to understand the crowd a little bit, how many in the crowd are actually more comfortable discussing about grants and writing versus basically deciding what your valuation of your company could be? So raise your hands on the grants. Raise his hands on the valuations. And everybody else is just here for they're just excited. So that gives us a little bit basis. I think impact investing is interesting because it does combine two different worlds that candidly are completely different from each other. We basically at Unitus Impact would actually make the proposition that poverty is the result of many things, but in particular is the result of, on the top three, precarious livelihoods, accessibility to capital and affordable housing. We would believe that the green section here is traditionally the purview of the for-profit worlds if you look into developed markets. So, and then below this, we would actually think these are all extreme problems in the world, and that they should probably be looked at as the potential for NGOs and for governmental organizations. Some of them you could argue with, but those are the kind of the areas that we look at. So Unitus in particular, Impact looks at precarious livelihoods. Traditionally, Unitus has been in the accessible finance via our microfinance banks. That just went the wrong way. But that was the shortest presentation of all time. There we go. I won't spend a lot of time on this, but we basically would say that in Unitus Impact, at Unitus we've been overall as an entity in microfinance. Many people know our different entities in microfinance since 2000. We have 26 microfinance banks around the world. We have investment bank, we have private equity funds, et cetera. But the newest area that we're really looking at is to say, is there a way to basically increase the livelihoods of the working poor? And that basically, we don't want to overdo it with metrics or anything. It really defines, can we basically increase the income of a working poor person, or can we create an opportunity for that person to make money? It's a pretty simple aspect in our basis. We basically utilize very quickly that we identify. This is a very venture capital backed perspective. We've invested a minimum of $500,000 into deals, and we can go up to a much larger. And then we basically coach. We basically understand that entrepreneurs, there's a balance between good entrepreneurs. You can either, as a venture capitalist, I grew up as a venture capitalist and have done it for the last 30 years, you have to learn whether you're the coach or the player. If you decide you're the player, then you should get on the field, which is being the entrepreneur. If you decide you're the coach, practice your coaching skills and keep on the sideline, as we usually say. So that's something that we very much look for. Unitus overall, like I said, you probably have seen some of our entities, and it's somewhat confusing in the market, which if we had to go back again, we'd probably label them different things. But Unitus Labs is essentially our nonprofit. We have a nonprofit, and it basically makes, in part of that, we have the Unitus Seed Fund, which actually does very low investments of $100,000 or less. We also then have the Unitus Equity Fund, which is actually managed by Elevar, which is the first private equity fund in microfinance, formed in 2004. Elevar is the brand name that we actually invest out of for that, and they manage that. I have to say that part of the goal of Unitus is that we want to basically to prove to the capital markets that this is not just nonprofits dressed up in a for-profit suit. So our funds have actually done very well. I can't actually quote exactly what they've done, but they have returned their capital at least 3 or 4 times at this point for most of our funds. Unitus Capital is very important. They've raised over $700 million in less than 3 years for social entrepreneurs. And once again, that's a leveraging of our basis. And then Unitus Impact is our newest entity, which we're experimenting with livelihoods here in Southeast Asia. You basically kind of boring stuff here. Just kind of just tells you who we are. I think that what's interesting is that you can see that most of Unitus's background is historically all people from the business environments. Although most of us have worked in nonprofits much of our lives, it tends to be people that actually have more business and investor backgrounds. And the two things I'll just finish with, because I don't want to take up too much time here, but we would basically look at, when you look at livelihoods, there's going to be gaps in the supply chain, and there's going to be inefficiencies, and we actually think those are what we consider to be great places to improve people's livelihoods. If a person is only making 1% of the retail price of a product, we don't just look at that as that the poor are being taken advantage of. We look at it that there's so much inefficiency in that distribution chain, we should figure out where all that money goes to and create a company to basically make it more efficient with more money going down to the poor person and taking the rest out. It's a very simple process, actually, and we would actually answer the question is that there are really no social enterprises in our perspective in this area. It's simply basically if you can make enterprises more efficient and basically leave more money at the producer, which is generally the poor person, that essentially is social across the board for that. And then on limited tools, we also basically believe that there are certain things that we can help undo. We have different companies that I won't go through, but once again, Unitus Impact's only been around for a year. It's expanding quite rapidly. And these are actually just some of the investments. We even have one of our CEOs here in the front row. You want to take a bow? And we have everything from, like I said, accessible for finance. We have mobile money companies. MYA is a dairy distribution company. Micro Benefits is the first Chinese blue-collar benefits company in China and works with the Chinese factories. So that gives you a little bit of oversight from a Unitus perspective.
Do you want to go next? Sure. You sure? Oh.
Thanks. Hi, my name is Michael MacHarg. I'm with a social enterprise called Simpa Networks based in Bangalore in India. I won't go deep into our model. We're actually pitching at the social enterprise pitch for the next session. But we're really working on an innovative pricing and finance approach for off-grid energy, beginning in India and then looking across Asia. One of the things that I wanted to talk about today, I would give you a little bit of credibility in terms of the capital that we've raised thus far. We began with a convertible grant of $40,000 at the seed stage, got part of our approach is a technology, so we had to build a proof of concept technology. Based on that, what we like to say, a PowerPoint and a prototype, we raised around a Series A round of $1.3 million from impact investors, both institutional and individuals. Still at the kind of seed level, we're now in the midst of raising another round of equity in the company. And like a lot of social enterprises, also dipped into the grant category as well. So really have played with a lot of different types of financing in this space. And so actually, Hardika and I spent some time yesterday, and I've had some conversations over the past couple of weeks, and talking about, where is this disconnect between social enterprises and the financing side. So I came up with Mike's top 5 dating tips for impact investors, how to bridge this gap and some of the issues that I kind of see or we see coming up. And now many would say I'm not the one to go to for dating tips, but in this space, maybe I know a couple things. One thing, and this is really speaking to impact investors, is know thyself in the sense of who are you? Are you finance first? Are you impact first? These are very different. I tend to argue that I don't think there are any impact first investors out there. It's finance first, and impact is a key component, but it's not first. And so what I'd like to see more of is organizations, investors be very clear about who they are, what their expectations are, what their processes are. Get that up. That is extremely helpful from the enterprise side, to know that as we approach different investors. So that's, really pull back the curtain. Let's be transparent on both sides, but really know thyself. The second is get risky. I think Wolfgang touched on it earlier today, that there isn't enough risk in this category. I mean, the fact is, some of this money that's coming in is grant money. And I don't know why there isn't more risk taken. It took tremendous failure in Silicon Valley to build the companies that are built today. But we see a lot of piling on of the same deal that looks less risky, or that there's a lead investor that everyone can trust. And so we're not really pushing the boundaries. Who would have invested among these impact entrepreneurs in Muhammad Yunus 30 years ago? I'm not sure many would have. And I brought it up, and I have a sordid history. I did some work with Acumen Fund, and brought it up with, and said, where's the failure? And why aren't we failing more? Or why aren't we seeing more failures and even being open about it? And there's a lot of reasons, but in general, I'd like to see much more risk-taking in this field. The next is respect, and this is one that kind of that we were talking about, and just kind of thinking about this space. Capital and investment is kind of an inert object. It doesn't do anything unless you have the enterprises, the entrepreneurs, the people, and eventually the customers and stakeholders to make that impact happen. And I think we have to level the playing field a little bit. Now, I'll just kind of give you an example, and this is not, I've had a great experience with the IIX team, but I'll go into this social enterprise pitch session. I've spent 2 weeks with the IIX team giving due diligence. I'll walk into that room. Everyone will know who I am, my biography. They can look on the platform and know everything about my company. I don't have a single list or knowledge of who's in that room. And so we have to show some respect on both sides. We have to say, look, I need to walk in and to build relationships with people. I need to know who's in the room. And I think we can't put investors on the pedestal, but I think entrepreneurs, stakeholders, everyone needs to be alongside each other. So I think there's a level of respect we have to get to in that category.